Okay, welcome back. Money makes the world go around, finance, fintech. Our next speaker is Schoch. He's got a background in and a long experience in finance. He's been with Goldman Sachs in London and in Switzerland. He then joined Lehman Brothers, and in 2007, he founded Leontech, which is a Swiss FinTech here in Switzerland. Title of his talk, Bridging the Gap, How to Build a Unicorn in the Swiss FinTech Ecosystem. So without further ado, I'd like to introduce Schoch, please. I give you Schoch. Here you go, sir. Over to you.
Good. Thank you for coming. I'll try to do a 20-minute speech, and then I have 10 minutes for questions. And I want everybody to engage, so please think about the questions and make it tough. So let's talk about Leontech and the foundation. Can you read that? Impossible, right? So I'll talk about it. So Leontech, we founded the company 10 years ago. We is 4 people, 4 founders with different competences. And I had to write down some notes here, which I will come to, because I've not had the time in the last 10 years to write down the history of Leontech. The way it looks like now, I don't have the time in the next 10 years either to write it down, so I'll have to go with it. So why did we found Leontech? You know, we were in the daily business, as mentioned by Jack before, and we have seen that there's a lot of inefficiencies, a lot of legacy. And we were just fed up with the legacy, which we have seen in our daily work. And that's why we have founded the company. I think it's a very good motivation to found a company to fix something in your life, which is making you angry. I think that's a great start. So we were fed up after 6 years of working with IT legacy in investment banks. And we wanted to do something which doesn't just generate money, but we wanted to do something which ultimately makes sense, where you're also happy in life, right? So on the 16th of February, within 3 hours, I've gathered my founding partners. One I've met at lunch, the other one has been working at the company which I worked at the time, and the third one was head of trading at the time, and I just called him. So within 3 hours, we agreed we're going to do this company. That was the 16th of February, 2007. Then I wrote the 60-page business plan in the military service in Switzerland. So that's the advantage of military service here. And we then resigned on the 20th of April, 2007, with basically nothing in our hands. Then just a letter of intent from a partner, which was a private bank in Switzerland called EFG, because we needed somebody who offers balance sheet. We're a fintech company, so we're not just technology, we're also financial service. So that's what we had. 20th of April, resignation. I was 29 years old. I've been offered more money than I could spend in my life, but we still all resigned because we said it doesn't make sense just to stay for that reason. You need to do something which makes sense. So we literally started at zero in July 2007. We didn't even have a company. And the biggest problem in 2007 was that 2007 was the best year, probably in the financial industry, and people have been paid horrendous salaries. So our first worry was, how can we get the people out of, Goldman and other companies if they're being paid salaries? We cannot offer, the salary, we cannot offer the bonus. But we have found a lot of people who actually also said, we want to do something which makes sense in life, right? So within 4 months, we have hired 40 people. We didn't even have a company. We have not inaugurated the company yet. We didn't have time. So we had working contracts with no company name yet. So within 4 months, towards end of 2007, we have gathered the people, and that's great. So we got the right people, not the people which are motivated just for money, the people which are motivated to fix a problem in the daily work, which they are in. So then in September 2007, we have actually inaugurated then the company and have given the people the respective contracts, But you see, this is based on a lot of trust. So we have worked together with other people in the industry, and they just joined because they said it does make sense what we are effectively doing here together. I think that's the start. Then, if we go a little bit broader, and you have to probably imagine that page here. If you look at the whole financial service sector, I want to tell you, and that's probably one of the senses why I'm standing here, this is the biggest opportunity in the financial service sector ever in its history and probably ever in the future. And why is that? Because here we have an oligopolistic industry which is breaking up. So there's a tectonic plate movement in terms of the value chain which is breaking up. So this industry is being in the process of being disrupted. And if you think you're too late, you're not, because I think it's about 2% which has happened. So 98% is still coming, right? So this has been for a lot of decades an industry which you could not have challenged because it has ring-fenced itself through regulation and other reasons, and now it's about to be broken up through technology. So that's the opportunity. So if you look at the left-hand side, there is the vertical integration of a value chain of a typical bank or insurance company, and it says it's 90% integrated. That means they do almost everything on their own, which makes no sense. So they should outsource to other companies, and we are a B2B fintech company, but there's others they can outsource to, and to actually be more efficient. So every normal industry has kind of a vertical integration of 30%. If Porsche would be producing the whole car on their own, they would not be, as fast, and they would be probably much more expensive. And that's exactly the analogy which you see now in the financial service sector. So given they had too much money, too much success over decades, they have not invested into IT. They're at the point where they're just inefficient. And I think that's the reason why one can attack. And all these regulations which are coming up, which they thought ultimately is a chance for them, is actually becoming a problem because it's too complex to solve without technology. So that's the stage which we're in, a very interesting sector which you can disrupt. And there's two business models. One is B2B, so business to business. So you offer banks and insurance companies services so that they are more competitive and the product makes sense, so more client-centric. Or you go to the client directly, which is B2C. And most of the fintech models out there, they're a combination of the two. Or they start in the B2C area, test the product with the client. If it works, roll it out to B2B to get more scale. In general, in the US, you have more B2C models, and in Europe and Switzerland, you have more B2B models, because in the US, obviously, you have a much bigger consumer base. So there's a big challenge in the industry, which is here on the left-hand side. And that's also reflected in Leontech. That's clear, for those of you who have followed the stock price. But I think that's at the same time also the big opportunity in the sector, right? The sector is so much under pressure that it has to change. The sector did not have to change for decades. Now it does have to change because of financial pressure. Clients want to see more progress. So I think that's clear. Here you can attack. Now, what is Leontech doing, and why have we chosen a certain area? If you look at that picture, you should obviously not do the whole 70%, but you should always focus. So if you start a company, don't try to do everything. We have also made that mistake in the last 2 years. We have tried to do too many things at once and too much investment too early. So try to focus as much as you can and make that the best product in the world. And what are we focusing on? Generally, it's structured products and pension products. And we just automate and democratize investment products. That's what we focus on for a B2B business, so offering it to banks and insurance companies. And that's just to give you some thinking so that you understand how you can think about this and to think about your own sector which you want to pick. Structured products in Switzerland had 60 billion Swiss franc AUM in 2000. Within 7 years, that 60 billion grew 6 times to 360 billion. And that sounds good from an instance, if you look a little bit at it. But if you effectively look at it, it has been the biggest problem of the industry itself. Because the tickets have been very large in the beginning. There was institutional transactions only. So $100 million was the minimum size, which was traded in 2000. And now we have democratized structured products, so everybody of you can buy a product because we can make tailor-made products for $1,000. So that's democratization of investment products, which we have pushed forward, but that was already on a good way as we have gone from 2000 to 2007. The problem is that the infrastructure in the back end has not picked up at all. So everything was still manual, so the cost and the operational risk to process this has been horrendous. It wasn't horrendous for a $100 million ticket, but it was horrendous for a smaller ticket, right? And so that's why we have chosen this sector, because it was not, anymore oriented towards the client. The client initially in structured products was institutional clients like insurance companies and the like. Now there was much more private investors coming into that market, and they need more service. And given the infrastructure was not there, there was no service which could have been offered. And we said if we want to have a client-centric business model, which is the key of the success of anything you should think about if you start a company, then we need to build the right IT infrastructure. Fact is, we tried at these investment banks. It didn't work because we had an already old legacy system out there, and because the market of structured products has become victim of its own success in terms of the providers, because it grew too quickly. So in 2007, 360 billion outstanding in Switzerland, the market was completely stuck. And we said it's better to start a company all over again and democratize investment products from its scratch. So I give you some numbers also that you can think about how you can build such a company. In 2007 up to 2008, it's not on the slides here, we have lost about 10 million. So in the startup, you lose money first, right? And we have burned about 25 million of cash. And then in October 2008, we had 80 people on the payroll, almost no cash left, and we have reached break even on a run rate basis per month, right? And October 2008 is a pretty interesting date because 2 months before, Lehman Brothers has gone bankrupt, and we have been in structured products with 80 people outstanding. And we have, of course, asked ourselves, are we in the right business? Is this making sense? Are we just stupid and kind of investing in the wrong area? We said, no, it's actually making sense. That's why we have hired another 50 people. Within a year, we have been cumulative break-even, which means all losses have been made back. Now, important if you start a company is you shouldn't go 95% of the way. Even if you face difficulties, as we face them now, don't give up, right? Because many people give up after 95%, but it's the last 5% which make you really successful. And that's what you should think about. Many people would have probably given up in October 2008 with 80 people, no cash left, right? So that's our situation. We have had an equity investor as well, but we have brought in half of the capital ourselves as we started the company. EFG brought in half of the capital, and that was basically burned at the time. Now, if you look at the history, in the last 10 years, and that's also important, you should always generate revenues. Don't just think about the product, always generate revenues, because you don't want to dilute yourself. You want to have as much stake as you can over time. So don't be happy when you have the capital. That's the start of it, right? You should then actually worry to generate revenues. The product in itself doesn't sell itself. You have to start selling it. So in the last 10 years, to give you an impression, we have generated 1.2 billion Swiss franc of operating income, of revenues as Leontech. So that's a big number, and we have generated 250 million of profits in sum. And we had 950 million of expenses since we started the company, of which about half has been invested into the platform. So we have invested 500 million Swiss franc into this platform, and that is what is making us unique today. So also think long-term, because these things don't happen overnight. Even if you like to disrupt overnight, I don't think it happens overnight. So focus also on revenues. Now, what does it generate now? Today, we have a platform, thanks to the 500 million investment, which if you compare it to the big banks out there which do these products, or the big insurance companies which do these products on their own, we are 10 times faster and 75% cheaper. And that's our competitive edge. Today, we have 9.2 billion Swiss franc outstanding of products in the structured product market, and that is less than 1% of the market share. So think about the opportunity. That's why we need to focus, right? We have less than 1% market share. We've invested 500 million. We are 10 times faster, 75% cheaper, And we're the only one in the world offering the business model to produce these products, investment products for banks and insurance companies. There's no competition out there. I think that's why you need to focus. Now, independence is also important for a company which offers B2B service, right? And that's why we then at one point said it's important that this first shareholder, which had 50% of the shares, is selling down. That's why we did an IPO in 2012. We have raised 70 million capital in 2012. And then we did a capital increase in 2014 for further growth of an additional 170 million. So in sum, we have made 250 million profit. We've made a substantial amount of capital on top. And today, we have an equity of about 400 million Swiss franc. So that's where we stand as Leontech. And if we learn something, I think we learn, and that's what we learn now, going again through a little bit more difficult times, is that you always need to focus. Don't lose the focus, right? We have made a capital increase in 2014. We have spread too much into too many areas. And we're now learning to focus again, which is actually reviving entrepreneurial spirit greatly. I think that's therefore a big opportunity for the company. So I have to hurry up so that you can ask questions. Now, what is the business model? Simple. We automate sell side, so who produces the products and who consumes the products. It's like the Uber, we have the two sides. We automate both channels. We started on the sell side. We continue on the buy side. That's basically what we do. What we offer is a package of financial services and technology. It's not only financial services, it's not only technology. I think it's a combination which makes us strong. The company has gone through different phases. Impossible for you to read. It's 5 phases. The first phase is the foundation phase. 2007 to 2008, we have grown, as I said, to 80 people. Then there was the expansion phase. 2009 to 2011, we have expanded into 7 offices, 6 countries, and we grew from 80 people to 240 people. Then there was the independence phase with the IPO, 2012 and 2013. We grew to 300 people. There was the white label phase, 2013 and 14. After we have become independent, it was possible to offer the platform also to other banks and insurance companies to use. And that was the precondition. That's why we did the IPO. We grew to 350 people. And now we started software as a service as a last phase, where we have overinvested in the last 18 months. And we are crawling back to a certain extent on that. So we have grown to over 500 people, and now we are at about 480 people. So these are the 5 phases which we have gone through. There's a number of partners which work with us. Don't want to bore you with that. Different banks and insurance companies. And there's scalability of the business model. So if you look at the growth of products, that's the black line. So number of products which we issue have been growing 45% plus in the last 7-8 years. So that's really scalable. And you see the unit costs on the right side, they are decreasing. And that's what is important. That's making us strong. That's the competitive edge. That's why we are, overall 75% cheaper than competition and 10 times faster. Now, if you ask me, what are the points which you should watch out founding a company? You will probably think that the biggest challenge has been building up the company in the financial service sector with the start of the crisis, because we started in December 2007 with the license, and that was the start of the recession, etc., etc. So I think you could say kind of choosing the wrong sector, wrong timing, wrong focus, etc. I don't think. I think we have chosen the right thing. The biggest challenge was probably organizational structure, because as you grow, you have to adjust the organizational structure so that communication works internally. And secondly, just stay focused, right? And that's the 2 points which we have, where we have overinvested. Last year, in our white label business, the AUM grew 45%. So it's a strong growth of our core business. But clearly, we have pre-invested too much into the future. Products I will not bore you with, neither the insurance product. But if you look at the FinTech landscape in Switzerland, last message here is there is not enough FinTech companies out there. It's about 180. I'm engaged in the Global FinTech Association, which I founded, which is a global organization coordinating FinTech companies, because that's an ecosystem which needs to work and is also co-selling. But here you see that regulated FinTech companies in Switzerland, there's not enough, right? In the UK, There's many licenses. In Switzerland, there's just few licenses. And I think that's where we need to pick up as a Swiss market. So with that, I close. I ask Jack to come in and give me the tough questions. How does that work? Do we have a mic? Ah, there's a question.
Ich muss das aber hier. Du musst mir erklären, was es ist. Was ist das genau?
Do we have the microphone? But if you want to just shout loud enough, the microphone's a lot of fun. I know we have another microphone, actually, but go ahead.
So if you have to advise a young startup who's going into the fintech, would you advise them to bring in something very daring, something very new, like new blockchain technology? Or on the opposite, as the financial industry, it's quite difficult to shake up, you would more advise them to look on something very niche and maybe find something where you could automate and optimize and digitize this process and then work on a B2B level?
I would certainly use blockchain if you can. So use the most modern, technology out there, which you can, because you need to scale, you need to make it cheap. Focus on a niche, and the best niche in the financial service is back office. Sounds boring, but that's where you need to automate. That's where the problem is. So go right to the core. Don't think that you can add a nice app, which is just kind of showing some statistics. It doesn't change the world, but you have to go right into the heart of the respective institutions, because that's where they have the issue, right? They have an IT legacy. So yeah, sure, always use the most modern IT programming languages, Scala or the like, or blockchain. Certainly don't go for outdated ones and try to scale as much as you can. But be niche. Look at the Leontech history in the last 2 years. Just focus on niche.
Which is a great practice in any industry. Try to be all things. Hello. Try to be all things to all people. You're nothing to everybody. So yeah, be niche. You'll get the roots sprouting. Yep. Any other questions for Jan? Here comes the microphone. Thank you, David.
Thank you very much for taking your time. I have a question about your personal career path. You first joined Goldman Sachs, if I'm right, and then to Lehman Brothers. Do you think Leontech would have worked also if you started the company right out of University of St. Gallen? Or was it worth going to the corporate world first?
If I look at Leontech, I think it was worth going into the institutions to see where the problem is. But the question is how much time you need to spend. I think I've spent too much time, too much of my valuable life at these institutions. So you can also do an internship or the like, and you will see the problems very quickly. I think it's very obvious. And nowadays, technology is much more advanced, so I think you're also going to be faster. You can hire the experts, right? We believe that, there's probably 100,000 people in Switzerland losing their jobs in the financial service industry because of disruption of the value chain of what I just showed. So there's going to be a lot of people which know exactly how the back offices work. You don't need to necessarily understand it all yourself. So you have to group people together with different competences, and why don't you then take somebody from the financial industry which understands that part which you want to disrupt, and then you can start right away. And I think that's what you should probably do. Because if you wait for 2 to 3 years, the train is going to be gone.
Okay, one more question. One more question. One more? Okay, well then, you snooze, you lose, as we say in upstate New York. Jan, thank you very much. And a big hand for Jan Schoch, please. Thank you.